You're thinking about buying a home? Before you get into that mortgage, watch this episode. We'll be right back. We're talking about mortgages today on Personal Finance Friday. So, buying a home is scary and it's exciting at the same time, whether it's your first home or whether you've got several under your belt. Either way you do it, there can be a lot of emotions involved in picking out how many bedrooms and bathrooms you're going to have, what kind of siding and fixtures and all that other kind of stuff. But with all those things you're looking at, there's the reality of what it will cost and how you're going to pay for it. And that's what we're going to talk about today. What impact will buying this new home, along with its mortgage, have on your monthly expenses as well as your long-term financial plan? When you reach the point of asking, can I afford this? There's several things you need to think about. Now, the first thing you need to know when it comes to a mortgage and buying a home is qualifying for a mortgage has absolutely nothing to do with whether you can afford it or not. What the mortgage lender is willing to lend to you may or not be something you can actually afford when looked at in the context of your entire financial life and all the other demands on your money that there may be. Now, this isn't meant to be an indictment of mortgage lenders. They're not all bad, although some are more shady than others. They're not out to get you or anything, but it's not their job to make sure that the mortgage they're offering you is something you can truly afford. They get paid to put you in the biggest, most expensive mortgage they can possibly do. That's their job. They have to do it, of course, within the context of something called underwriting rules, as well as regulatory rules that apply to them. The underwriting rules are guidelines they have to follow in your debt-to-income ratio and all kinds of other things that go into making their lending decision. And of course, there are state and federal regulations they have to follow as well. But ultimately, they're only going to ask you aspects of your financial life that matter to them in the context of their underwriting rules. Everything else is outside the scope of what they are interested in knowing, and they don't care. It's up to you as the borrower to put the brakes on the entire process or scale it back and take into account what's going to happen to your expenses and your financial picture with the mortgage payments you're contemplating. Now, why shouldn't you absolutely max out the mortgage and get the biggest, best house you can possibly afford? Well, there are lots of reasons not to do that, and way too many of them to go into in a single short video like this. But suffice to say that if you carry the maximum debt load possible, whether that's your mortgage in addition to possibly car payments, credit card debt, student loans even, things like that, if you're carrying your absolute maximum debt load and something comes along to trip you up financially, the fall is going to hurt and your ability to pick things up and walk again is going to be very questionable. If you've previously been a renter before you go into this buying, shopping process, you've had the luxury of being able to call your landlord or property manager when something breaks. They come and fix it at their expense, not yours. It's just a phone call to you. Your monthly rent doesn't change. But remember, when you're buying your own home, you are your own landlord. So all those repairs, there's nobody else to call. It's on you. You have to be able to fix whatever's broken, but whether that's buying something new or pay to have it repaired or even repairing it yourself and you have to go buy the parts and pieces. Either way, it's on you to make it happen and it's on you to pay for it. Now, why am I bringing that up? The mortgage lender is not going to ask you whether or not you've put aside a pot of money to cover any kind of repairs that the home may need. Whether it's a cushion for future possible repairs or if you're buying a fixer-upper, they're not asking the question of whether or not you've got that money to make that happen. Now, if this isn't your first home, you know the sort of repair expenses I'm talking about. If you're upgrading to a bigger house, keep in mind that those repair expenses will scale up right along with it. The bigger the house, the bigger the repairs will be. Along that line, if you're looking at upgrading from a smaller place that maybe you bought when you first got married and before you started maybe having a family, and you're looking to upgrade to something larger, remember that there's all kinds of other expenses, not just repairs, that are going to scale up with the size of the house. If you're going from a 1,500 square foot house with a utility bill of around $200 a month, and that could be just electricity and water, around $200 a month for 1,500 square feet, and you want to upgrade to 3,000 square feet, well, suddenly that utility bill is going to go to $500 a month plus. Can you afford that jump in utility expenses in addition to the mortgage payment? Now, other things that the mortgage lender is not going to take into consideration when they're looking at your mortgage application and telling you how much you can qualify for, again, not what you can afford, but what you qualify for, is what about your retirement planning? They're not asking about that. Why? Because that would reduce the size of the mortgage that you're going to consider. They don't want to know about your retirement plan. What else don't they want to know about? They don't want to know that you're going to need a new car soon, so you're saving for that. What about if you already have kids, one of them needs braces, or you're saving for the kids' college? All of these are demands on your money on a monthly basis that have absolutely nothing to do with paying the mortgage, that the mortgage lender is not going to ask about. But they're expenses that you must consider of whether or not you can really afford the mortgage. Now, I could go on and on for a long while about this kind of thing. Suffice to say that there are many, many, many demands on your money beyond the scope of the mortgage itself. What you don't want to end up being is something the realtors and people like that will call mortgage poor, where your mortgage payment is so huge that you can't afford to do anything else. Life today is complicated, particularly from a financial perspective. You have other goals to save for beyond the roof over your head. Now, I'm not saying you don't need that, not at all. But when you're shopping for a home and shopping for that requisite mortgage to go with it, be more realistic. Look at your budget. Look at what you have to save for retirement, what you have to save for your kids' education or medical expenses. You're going to have to replace a vehicle at some point. You're going to have breakdowns, other things that happen that are going to make demands on that money that you're going to have to be able to cover. And if your mortgage payment is too high, you won't be able to do that. So that's about it for today. Just keep in mind, qualifying for the mortgage is not about what you can afford. Thanks. Have a great weekend. We'll see you next time.